Hey guys, welcome to the first YouTube video in this channel. My name is Christian without an H. I saw a lot of people calling me Christian with an H, which is fine. And for the first YouTube video, I wanted to touch on this specific topic, which is the GFC going to come back this year or maybe next year? And we will have something like this for the S&P and major crashes on all the big indexes. And of course, Bitcoin finally going below 10K as some analysts proposed back in 22. But first, maybe some of you guys follow me on Twitter, or some of you guys are new maybe to my face. This is actually my face. It is my Anon face. Or maybe you prefer this one. I was actually pretty young back here. And first of all, I just wanted to present my track record. Starting with 21. This is exactly the spot where I thought crypto is awesome. You can see here Bitcoin just reached a new all-time high. Invested some money. I never invest all of my money into something I do not know, and I got lucky in the summer of 21. Bought some ADA, bought some e-gold, some Bitcoin, and here I made my first money. But because I didn't know anything about cycles, I got only 30% out. Spent the entire year of 22 to study the cycles, and went all in Bitcoin in 22, below 20K, because you're not going to buy all the Bitcoin at one specific target, which was the bottom at 15.6K, something like this. And this was all public knowledge on my Romanian YouTube channel, which holds something like 194K subs. This is in almost 5 years, if I remember correctly. Anyways, no need to get into more details. I did a lot of stupid shit back in 21, lots of pre-sales, lots of money thrown out the window. That's why here I started with Bitcoin 80%, and then slowly and gradually got into altcoins. So the TLDR right now is I am not an OG. What I am instead is an obsessed human being. And maybe if you saw my tweets for at least 1-2 years, you can also confirm this. Next topic is my proposition about the big cycles on the S&P, which I first posted on May 26, 2023, proposing that the secular cycle we are in is not going to be over before at least 2030. You can see here that major financial system resets happened something like 30 years between them. We had the fractional reserve banking here, if you remember the Gold Reserve Act. With the Great Depression, this thing ended. Then we had something like a 24-26 year secular bull market. Then we have the secular bear market, which lasts something like 10-12 years. Another 24-year secular bull market until the dot-com bubble and also the GFC, which this also lasted something like 10-12 years. And we are right now on the verge of finishing this secular bull market. My guess about 2034, which also coincides with 2035 to 36 Shemitah year. We will be speaking about those also in this channel, because we need the big picture before we start investing into the small picture. Back then, the S&P was rated at about 4.1K, and we all know we resumed the pump until 6,000 on the S&P, which is also my target back here. So this is my main thesis on when we should have another secular bear market. That's why the title of this video is called All Analysts Are Wrong. When putting this out there, just saying, hey, it's something about like the GFC. No, it is not. Next up, we will see some big swings I got since 2023. This was another one with the S&P index. I've spoken about this resistance right here using simple Fibonacci's and also the Fed rates back when we were in July 23, speculating, not predicting, speculating on a pullback back to 4100 on the S&P index, and also some small pullback on Bitcoin, at least until September, and then the resumption up, along with the Fed pausing the rates for the first time after 22 rate hikes, which we all remember that they were the most aggressive in a long time. If you can't remember, this is the live chart. We had the S&P after reaching in July 450. We got a drop back to 4100 and the first rate pause in September, followed by a second rate pause in November, which again, if you remember this chart back then in July 23, this was what I expecting. Yes, an overperformance by our friend, the magical cryptocurrency called Bitcoin. This was the pullback it got right up to this support right here, and before the secondary rate pause, which came in 1st of November, something like this, this resistance right here was broken out of, and you know the rest, which takes us to my next post, also back in 2023. This was my speculation. Let's not call it prediction, because people will say I'm very arrogant, which I'm most certainly not. But this is what I thought it would happen after they came in front of us, sold us a few words. Powell anyways. Something similar with 2019. Before a remarkable 3x on Bitcoin. We all know the chart after this one, mostly because bears right here started acting like we need something like this before the halving, bro, because that's what we always do before the halving. Something like May 5th, 2020. So after a pump, we necessarily needed to go down to sweep these lows just before the halving. Maybe some of you guys know this post, maybe you are new here, but I was on the team that Bitcoin should do a 3x at least before the halving. That meant Bitcoin should go over its last all-time high in 21 before we reach the halving. Of course, I was called crazy. Same thing about the S&P. On October 27, after I got right, I speculated right with this pullback, I said on the 27th, correction almost over, rally should resume soon. And on the 31, I posted this chart. We all know how the chart looked like after October 23. Again, going forward, this was my market view back in, let's see, I think it was June. Yep, June 24. But I also had the market view posted on January 24. This is actually the continuation. And let's see, with the rate of change in the market, with rate cuts coming our way, I was not bearish, at least for 3 to 5 rate cuts. I said the market should still remain hot, and the S&P should start doing something like this, more volatility or volatility. You should forgive my rusty English. I haven't spoken this much English since I was like in the 4th grade and arguing with my English teacher. But then again, here we are. Rate cuts came. We also have the soft landing narrative, which we should touch on very quickly. And this was my Bitcoin chart. I said we need to have at least one leg up into the 104K area for Bitcoin, a sharper pullback into the below 80K area while the rates are cut. And I had a scenario 1, which was the continued downtrend, but after 3 rate cuts they stopped again and they paused. And again, you know how the chart looks. My guess is that if the rates continued to be cut, we would also continue the downtrend until this sticky shit got again into our way, just like this. Because this is not bearish as you have been told by all analysts. This is bullish. This is actually bearish. So I've stated also on Twitter, I do not like to see a cut in May, and the market will warn us if something bad happens next. And here, for as long as the Fed keeps the rates at the same level, the market should continue doing this. So basically being in the second scenario, which again I posted on June 2024, favoring this scenario right here, because if the first one could have happened, it should have happened by now, and we would have more rate cuts, and these pauses right here should have come later on, and the market would have told us that they are coming. So going to my next chart, this was from the YouTube channel in Romanian on April 15. Exactly 1 month ago, the S&P did something like this, and I said this year I think we will be seeing high volatility, and investors and traders and everyone will be wrecked until the first half in 2026, and I will explain shortly what I mean by that. But then again, I think we are still on this scenario too, with a target for Bitcoin at least 160, and the S&P I think should do something like this with higher lows going into year end. This remains my base case, and I also have a pinned thread, if you remember this one, with charts explaining the same thing. You can see when we were at 6100 on the S&P with 2-3 FOMCs keeping rates the same, and maybe then we have something like this drop, and going into year end we will see how this chart looks like. This is still valid in my opinion. You should read all the details here, even though let's say the Ethereum Bitcoin chart, some people would say that this is invalidated because we went lower. I don't think so. I do not think anything is invalidated yet. And you need to remember that I never, and I mean never, delete any posts on this platform. I'm keeping them mostly for myself to see how I adapt to market changes, because the market is always changing, and the 2022 plan should be always updated if, but only if, you want to make money long term. So basically this is what I think will happen this year, and I do not think that we will have something like the GFC, something like this. I think we'll have higher volatility here, something like this, and the target for myself for the S&P going down, because my up target is done, even though we can go to maybe 65, 6600, drop again, lower high into the year end, and then going lower into the first half of 26. And why is that? Let's put on our zone here of interest for the down target on the S&P. Remember that I got this target right, the up target for the bull market. We will see if I get this right again into the first half of 2026. Let's do the weekly chart. Basically, this cycle scenario for me is based on rates. And why is that? If you follow me for at least a year on Twitter, I'm always placing bets following what the Fed does, not because the Fed is controlling the market, but because the Fed, I think, is monetizing the cycle. They drop rates when the inflation cycle is on a downtrend, and they hike rates when the inflation cycle is on an uptrend. And from 06 to 09, you can see that the Fed rates went to zero. I cannot remember when they were zero back in history. And now my guess is that we started an uptrend into 2030, and as long as the inflation cycle is going up, the rates are going up, the market is going up. Of course, with some bumps on the road. Nothing goes up in a straight line, unless maybe if you put Bitcoin on a 6-month chart, then yes, Bitcoin goes up in a straight line. And what I'm interested in, to time the next cycle low on the stock market, and after that Bitcoin and crypto, I have to know when are the Fed rates going to be at their lowest low again. And you can see here we have the dot-com bubble, and we can measure after the first cut to when the rates got to their bottom. It took something like 600, maybe 700 days, and you can also see the market bottoming out. This is a very tight correlation, but with some months of lag. Let's go to the GFC. Let's measure from the first cut to when rates bottomed out, and also the market. We have something like 550 days, 60 days, something like this. But note, the rates got, before the dot-com bubble, from 6.5% to get to their bottom, which was 1.75 to 1.25%, then going up again to 5.25%. Then the rate cutting cycle was shorter than the one in the dot-com bubble. Let's take 560 days. And this one was something like 660 days. But again, the difference is the rates were higher before the dot-com bubble versus before the GFC. Going into the COVID crash, we had the rates at 2.5%. Let's see the cutting cycle and the bottoming structure. We had 200 and something like 75 days, maybe 80 days. So again, versus the GFC, 5.25%, we are at half here, and we took half the days to complete the cutting cycle. We were at 5.5 here, a little higher than the GFC, and doing the same thing on the first rate cut. If we measure something like 560, 70, maybe 600 days, this leads us to March to April 2026. So by comparison, if we get to maybe 2%, because I don't think we go to zero this time, maybe 3%, maybe 2%, maybe 1.5, maybe 0.5%. It doesn't matter for me, because the exact percentage of the rates are not important. What is important is the rate cycle to be over. And this is the window of opportunity, in my opinion, March to April 26. And even if this market looks like this should be the bottoming structure for the S&P, and maybe 1 month or 2 months lag for Bitcoin. Targeting again this area right here for the S&P index, and I do not think we cross this, and I do think that all analysts are wrong, maybe because that is their nature. Analysts are employees to some funds, maybe some banks, maybe some corporations. They are getting paid either way. We are not getting paid if we take their word for it. So this is what I think should happen for the S&P, and also the same movement on Bitcoin and then altcoins, and then we resume the secular bull market going into 2030. But this is another discussion for another time. I just started this channel. If you like beer or any type of alcohol, if you like Ferraris, just smash the subscribe button and also the like button. I'm just kidding, but I'm not. These are the types of things I'm working on. And also, as any alive person on the internet with a, I don't know, maybe big following, I also have a closed group with people I work on every day. They also actively invest, and there we do more correlations in the markets with gold, with yields, with yield curve, with Bitcoin and some altcoins, with Bitcoin dominance, which I think will be the trigger to exit all markets, especially the crypto one. And if you want more details, and if you want to learn my system, what helped me until now, to predict, just kidding, to speculate on this market and make some money and literally change my life, check the description below. I also have a free newsletter which comes up in your email something like from 2 to 2 days, because I don't know what this next video on YouTube will be. Also follow me on Twitter if you are not already, and we'll talk more in the next one. I hope I did good in my first video on YouTube, and if not, just tell me in the comments and I'm gonna go drink like 20 beers. Cheers for that. Bye.